Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, August 21st. In today's episode, I'll tell you why the AI hype train might be starting to lose some steam. Let's also recap earnings from Target, Lowe's, and TJ Maxx. Then finally, let's dig into why Palantir is riding a 5-day losing streak. Markets took a dive yesterday with the S&P 500 down 0.6% and the Nasdaq lost 1.5%. This sell-off was kind of weird because more than 350 companies in the S&P 500 actually finished in the green yesterday. It was mostly tech stocks that got wrecked and dragged the entire market down with them. Some of the worst performing stocks yesterday include Palantir, which dropped more than 9%. And other big losers include Coinbase, Oracle, and Nvidia, which lost between 4 and 5%. So there seems to be a bit of a vibe shift from investors around the hot tech names, and I wonder if we might be starting to see the first cracks in the AI hype machine. Because as I mentioned on Monday, OpenAI's GPT-5 release was underwhelming after being hyped as AGI for the past few months. And it probably doesn't help that Sam Altman himself is now saying that AI is a bubble. There actually was a report this week published by MIT saying that 95% of generative AI pilot programs at corporations are failing to deliver measurable impacts on the P&L. So yeah, while all these AI tools are great, they're not really having an impact on the bottom line just yet. So we'll see if the hot tech names can recover from this sell-off. But either way, this makes Nvidia's earnings next week so critical. Now that there's some creeping doubt around the AI hype, if Nvidia's earnings come in slightly soft, it could take more air out of the AI hype cycle that's been pushing the markets up for the last few months. So once again, everyone's entire portfolio depends on Nvidia delivering on earnings. They report on Wednesday, August 27th, and that could be the moment that decides whether the markets keep flying or come crashing back. Let's run through some headlines, starting with Target. Target reported earnings, and on the surface, the results look pretty good. The company beat estimates on revenue and profits while also sticking to its full-year outlook. But the reason that Target stock is getting crushed this morning is because their sales continue to drop. Sales in Q2 came in at $25.2 billion, which is 1% less than Q2 of last year. And if you look at same-store sales, that dropped 2% compared to last year. In fact, Target has now reported negative same-store sales in 6 out of the last 9 quarters, and that's where the problem is. Target sales have basically been flat for the past 4 years, and that might be one reason why the stock is down 60% from its 2021 peak. Now, Target is trying to turn things around. They even announced a new CEO. The current CEO, Brian Cornell, has been in charge since 2014. He's stepping down at the end of January, and he's going to be replaced by Michael Fidelki on February 1st. Fidelki is a Target lifer. He's been working there for 20 years, starting as an intern back in 2003. Fidelki has been Target's COO and CFO, and now he's finally taken over the big chair. On the earnings call, he laid out his vision to make Target stylish again and using technology to run things more efficiently. But investors were not buying his pump-up speech. Target stock is down more than 10%. I think investors were hoping for an outside hire to come into Target to provide a fresh perspective. Fidelki's been there for 20 years, so he's going to have a lot of pressure from investors to turn things around. Let's shift gears and talk about chips. On yesterday's episode, we talked about how the Trump administration was in talks to take a 10% stake in Intel. Well, they might not stop there. According to a new report from Reuters, Commerce Secretary Howard Lutnick is exploring taking equity stakes in other chip makers too, including Micron, TSMC, and Samsung. His idea is to swap out the big grants that these companies were promised under the CHIPS Act and instead convert that into equity. A quick refresher here, the CHIPS Act was signed back in 2022 by President Biden with the goal of boosting US semiconductor manufacturing. The original plan was to hand out grants to these chip makers so they would build more chip factories on US soil. But Howard Lutnick wants to change that a bit. He doesn't just want to give this money away for free to these chip makers without the taxpayer owning a piece of the company. It's an unconventional approach, but it's not really out of character for this administration. Remember a couple months ago, the Pentagon took a stake in MP Materials, and I think this administration is trying to do the same thing with the CHIPS Act. Most of the $52 billion from the CHIPS Act hasn't been handed out yet, and it's overseen by the Commerce Department, so Secretary Lutnick has some leverage here. Now, of course, this kind of government involvement makes companies nervous, especially foreign companies. A stake in a foreign company like TSMC or Samsung would be unprecedented. Still, it seems like President Trump and Secretary Lutnick are sold on the idea, so don't be surprised if more of these kinds of deals are announced soon. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Lowe's are up this morning after the home improvement retailer beat earnings and doubled down on catering to professionals and contractors. The company announced an $8.8 billion acquisition of Foundation Building Materials, which is a distributor that supplies drywall, ceiling systems, and all the stuffs that pros use on job sites. We heard a similar strategy from Home Depot in their earnings call earlier this week. Professional contractors seem to be a more consistent source of business compared to DIYers. Investors seem to love this move by Lowe's, and shares are up more than 3%. Let's stick with the winners here and talk about TJ Maxx. Their earnings also came in strong, beating expectations across the board. The company also raised its full-year guidance, assuming that tariffs stay where they are. TJ Maxx is less sensitive to tariffs compared to other retailers because they purchase excess merchandise from brands, usually after the item has already been imported into the US. So TJ Maxx isn't the one paying the tariffs. Shares of TJ Maxx are up more than 4%. On the flip side, we gotta talk about Palantir because they continue to have a rough few days. The stock has been on a 5-day losing streak, and it's looking like it's going to be 6 after short seller Cintron Research called the company heavily overvalued. Cintron points out that Palantir trades at a much higher sales multiple than even OpenAI, which kind of puts things into perspective here. On top of that, insiders at Palantir have been dumping shares over the last 12 months, including CEO Alex Karp, who sold roughly $2 billion worth of shares in the last 2 years. Palantir shares are down more than 5% this morning, and the stock has shed about 20% of its value since August 12th. That's all for today's show. Keep navigating those waters and see you tomorrow.